What is next for global equity markets? Let's put that question to the man who got it right last March. Here's Marc Faber. He's the publisher of the Gloom, Boom, and Doom Report. Marc, great to have you back with us. Happy New Year.
Thank you. Happy New Year to you as well.
Is it going to be a Happy New Year for stocks as well?
I'm not so sure about that, because last year was the happiest year almost ever for investments in equities, in emerging markets in the United States. It was a bad year for U.S. government bonds. They were down 26%.
But bonds
this
had a
year
nice
is
run,
going to
right?
be much more difficult.
Right.
Now, yesterday I was at the round table with so-called enlightened people, and all of them were relatively bullish, and they all believe that the markets will continue to rise to between March and June, and then have a correction, but end the year higher or at about the same level. And I think this complacency and unanimous belief that we'll still go higher now may lead actually right now to a more meaningful correction, and then later on in the year maybe a rally, but maybe not to new highs, and that overall we could close the year lower than we are today.
So one thing you're not concerned about then is asset bubbles, right? Because you're not concerned also about a major bubble in the emerging markets either.
Well, I'm concerned about the U.S. government deficit bubble. In other words, I'm concerned about the government debt rising very dramatically over the next 5 years, and also unfunded liabilities going up very substantially, and that eventually in 5 to 10 years' time, the interest payments on the government debt will go up very substantially as interest rates then go up. So that is my main concern.
But there was a time, Mark, when we were all talking about the massive inflation that would come out of all the stimulus money that was poured into the system.
Yes.
And then more recently, people have been talking about asset bubbles being pumped up by this. And now it doesn't look like, at least in your opinion, either one of those things is going to happen.
Well, I think we have to distinguish. Basically, in the United States, you have a symptom of inflation, which is the weak dollar. And through the current account deficit of the United States, and the reserve accumulation overseas we had huge bubbles, in the sense that we had a property bubble in Dubai, and we have excessive valuation in some of the emerging economies in the property markets, like in Hong Kong, and to some extent now also Singapore, and we have a credit bubble in China building up and so forth. And the price level in emerging economies has gone up substantially. Say the prices in Hong Kong, Singapore, or in Sao Paulo are the same like in New York City.
We've spent a lot of time this week talking about the financial sector. You've got the bonuses coming out, public outrage. You've got financial executives going before lawmakers tomorrow to talk about the financial crisis, kind of to prevent us from getting here again. I'm curious, you're over in Asia. What's your takeaway on everything that's going on in terms of the financial situation right now?
You forgot to mention the Fed making such a huge profit.
I
wonder how they value their assets on which they're sitting. There's also no auditor. How can they show a profit?
Sure, anyway, marking in the market.
But I think in Asia we are concerned about Mr. Bernanke, and also in other countries around the world, that he will continue with his quantitative easing. I think it will be very difficult for the Fed to step back and no longer purchase mortgage-backed securities. Otherwise, if they stop, maybe the market will just decline and interest rates go up, which would be bad for the housing market. So I think that if, say, the market, we went from 666 on the S&P to 1140. Now we're coming off a bit. If we went down to around 900 on the S&P, you'd have more stimulus packages and more quantitative easing. And so I think that's a concern then about the value of the dollar, because don't forget, in Asia, well-to-do people are sitting up to here in dollars. The foreign exchange reserves of the $7.7 trillion, 70% are in Asia, in the hands of Asian central banks, including Japan, China, Taiwan, Hong Kong, Singapore, and so forth. And then individual wealth has also been built around the US dollar, so people are very concerned about the value of the dollar.
What are the negatives, though, to us? I mean, as long as he keeps interest rates low, we can continue to see a recovery, or hopefully a recovery in housing. And as long as we have cheap dollars, we continue to see this recovery and manufacturing supported.
And supportive of assets.
Well, I want to tell you something. First of all, if you look at the world, the strongest manufacturing countries, and exporters are actually countries with a strong currency, not a weak currency. Otherwise, Latin America would have had, in the 1980s, the most thriving manufacturing sector. Zimbabwe would be the world's largest manufacturer.
They don't have the infrastructure to even export anything.
Well, that's the issue if you have a weak currency, and that relates to money printing. Money printing doesn't create wealth. That should be very clear. And if the US believes it will become rich by having a dollar that goes down and zero interest rates, they're mistaken. In terms of international purchasing power, in terms of share of world's GDP, the US is going down, not up, and other countries are coming up. I'd just like to remind you that today the emerging world consumes more oil than the developed world, that the emerging world has higher car sales than the developed world, that the emerging world has higher semiconductor sales, and. I mean, we're no longer talking about we, the developed countries, being the smart guys in this world, and the people in emerging economies being poor and underdeveloped.
Right.
It's a different world. There has been a huge shift in the balance of economic power in the world, and it will have also geopolitical influences.
All right, we'll talk a little more about that. Also, I want to get your idea in terms of investment strategies for this year, where you think, because you said you had a pretty good year this year.
Yeah, I mean,
2009 was bad for Marc Faber.
2009 was very good.
Just sit tight this year.
I just want not to lose any money in 2010.
Mark, what do you like in terms of commodities? Let's start there.
Well, okay, the cheapest commodity right now is wheat. It's at the 200 years low in real terms. But it's difficult for individuals to play the wheat market because it's quite volatile, and you can only play it sensibly through futures. The ETFs are too expensive. So that's something I would play. I still like the precious metals, but I think they will go down first.
Gold? What about gold specifically? How much do you think it'll go down?
Well, I think we can test around 1,050, something like this, maybe even 950. But longer term, as long as I look at Mr. Obama, Mr. Bernanke, Tim Geithner, and Larry Summers, I will keep my gold. That I guarantee you.
But you say, although you don't see huge gains in asset markets, if you were willing to take a big risk, it would be commodities. It would be wheat, soy, corn.
I tell you, if I were willing to take a big risk, as of today, I will short the S&P. And I tell you why. At this panel everybody thinks that the markets are fine, that they'll close the year higher, and that for the next 3 months we'll have momentum on the upside. But I look at the market. Amazon is not acting well, Google's is not acting well, Apple is not acting particularly well, and so forth. Goldman Sachs hasn't made a new high for more than 2 months. So I have some signs that show that some weakness is emerging in the market. Number two, years ending in zero are not favorable for stocks, for whatever reason, but years ending in zero. Number three, years where you have midterm elections are not particularly good for equities. And after the huge gains we had last year, you can't expect another huge gain this year. Now, can the market go up 15%? Possible. But can it go down 20, 30%? Also possible. So the risk-reward is no longer particularly good. I think we have to take a holiday, and you want to go drinking in Britain, I go drinking in Thailand, and take it easy in terms of investments.
I feel like that's a good idea for people across the board, but everyone's taking new jobs.
My goodness.
Yes, absolutely.
All right, beyond drinking for 2010, let me just ask you, though, in terms of countries, because you're a little bit nervous about it.
There is a very good company in Thailand called Thai Beverage.
Okay, Thai Beverage.
They make beer. It's one of the best beers in the world, Beer Chang. And they also make whiskey, local whiskey. That's the cheapest way to get drunk with little money, because you buy a whole bottle for like a few dollars, and the impact, the efficiency of that whiskey is very high.
It's like college.
Absolutely.
Is it a play right for consolidation? Is it a public company? Can you buy it?
It's in order to save money. We have to cut down on spending. As you know, we are in a recession.
But you're serious. You're serious.
I'm serious. Thai Beverage is a very good company.
We got to run. Mark, thank you so much. We know you're heading on a plane. Thank you so much for stopping by.
That was enlightening.
Matt's going to check that one out. All right, Marc Faber, everybody.